G'day guys, how's it going? So the video that I'm bringing to today is one that I'm really excited to be doing. One, I just genuinely like doing these videos, so it's a bit of fun there. But two, a lot of what I bring to you guys is things that I've learnt from mentors. And a lot of time I've aggregated, a lot of concepts from a lot of mentors. This is something that I've never seen covered, certainly not in this sort of scope that I'm going to cover it. I might have picked up snippets here and there, but I've never seen someone take this as an entire topic and do a video on it. And so it's really exciting for me because by doing this, it's sort of uniquely mine, but more importantly, I can potentially teach something to the people that I've learnt so much from, hopefully. They might watch this and go, yeah, man, everyone knows that. What a waste of 15 minutes of my life. But if they do, that's okay. Hopefully someone will get something out of it, and even if not, I'm going to have fun making it. So what I'm talking about is the concept of balancing psychology and maths. Now, you probably got that from the title of the video because it's going to be something along those lines anyway. But what I'm really talking about is if you could get a robot and program it to trade for you, you would program it to do whatever was the most mathematically profitable system or whatever you want to be doing. And if you had a system, you would just optimize that for profitability, right? And that's something you should be doing in your trading anyway. But we're human. We have emotions, we have confidence, we have all sorts of things that will impact our trading, right? And it's a beautiful thing, right? Those things are what makes life awesome, but it can kind of suck in trading sometimes, and they do affect your trading. And it's important to realize they do, right? Very few people can trade completely unemotionally. And so what I'm going to be covering today is times where it's worth sacrificing a little bit of profit for a lot of peace of mind. And so that's where the name comes from, right? Balancing psychology and maths. Now, one thing that it'll be helpful to understand for this is like expected value or expectancy. If you don't understand them, I've covered them before in a video. I'll link that in the description. It's an old video, so if it sucks and you want it updated, drop me a comment or something. If you don't want to take the time to watch the video, then every time that you hear expected value, just think like average profit per trade. That's probably a pretty good stand-in for it. But it's not something like you should get most of the information from this video without having to understand that. So don't stress too much. So what I'm going to do is I'm going to take you to Tradingview. I'm going to run you through some of the examples that I've come across, not just in trading, right? I first covered this or discovered this in my gambling days. And so I'll start there and then I'll walk through some of the examples I've come across in trading and hopefully show you guys, some ways that you can, one, work on your psychology so it gets better, so you can get more mathematically profitable, but two, times where it's just worth, sacrificing a little bit of that profit and being happy with what's going on. So what we'll do, we'll head to Tradingview and we'll get started. Righto, so here we are, we're looking at my Tradingview, and the example I'm going to run you guys through to start off with is the short that I took on Monday, or I spoke about it in Monday's video. So if you have watched that, then you'll know that I took a short very similar to this. Stop loss there somewhere. All right, I took a short something like that. Now, I realized a while ago that mathematically the best way to trade my strategy was to purely trail a stop loss. Never take profit, trail a stop the whole way down. So, let's call that my managed stop. So if I was trailing it, now, I normally wait for market structure. So I'd sort of want to see a bit of a bounce and then I'd move it down here and then yada yada. I realize mathematically that's the best way for my system, right? And I know that because I've got the data to prove it. But I also know my psychology can't handle that. My psychology can't handle seeing, let's say 100% profit there and then watching all of it go back and I just get 50%. I just do not enjoy that and I don't feel good when I do that. And a really good example of this was on the way up, I think it was here. I had tried. I went, all right, I should really work on getting to the point that I can trail my stops. It's the most profitable way. And so for whatever reason, I decided to try it off this one, right? And I got into about a 3-to-1. Yep, there we go. So that was in, 4-to-1 profit. Sweet as. Normally I would have taken some profit by then. I didn't on this one, and I ended up getting stopped out for a loss. I had moved my stop loss to just on my entry, so it was a really small loss. But I was so dirty on this. I was like, you're kidding me. I was in heavy profit and I took none, and then I got stopped out and I actually lost money on this trade. My psychology is not at the point that I can handle just running stops and not take any profit. So what I do is I take profit along the way. Let's get rid of that. And so let's say that I was targeting these, which is what I was doing. Anyone who saw my update the other day will realize that I accidentally botched my targets and I put them in when I was on the 1 hour. So I took a lot of profit through this region, which is, it's not the worst problem to have. It's still making money, but it's not as much as I would have liked to have been making down here. But anyway, what I started doing, right, because I can't handle just running my stops, is taking partial profits. So I take, let's say I took 33% here, 33% here, and 34% there. I'd have 100% taken. Perfect. That's how I started trading this system. After a while, when I realized that I was better off just running my stop, I went, okay, what I'll do is I'll make each of these 25. I might even have a template for that. No, I've got a 20% one. But I'll make each of these 20%. There we go, I'm going to confuse myself. Each of these 25%, and then I'll just trail my stop loss down for the remaining 25%. So what that would mean is, let's say price got down here. I've taken 75% off the table. I'm going to have my stop here somewhere above previous structure, locked in a heap of profit, but can also keep running this stop down as price comes down, right? So that mathematically makes me slightly more profitable because it takes me closer to that, mathematically optimal profitability. I'm going to use mathematically profitable so many times here, so please forgive me. But it does. It takes me closer to that ideal, but it's so much easier on my psychology, right? It's a level that my psychology can handle because I'm taking partial profits along the way. Now, I actually got the idea for this from back when I was betting on horses, right? I used to be a professional gambler. I used to do a lot of betting on horses. And a lot of what I did was I would bet on a horse to win. I'd also bet on that horse to lose, which sounds kind of crazy, but you can make money doing it in certain ways. I realized a little bit of the way into it that mathematically I was better off not betting on the horse to lose, just backing that horse to win. But I was betting quite a bit of money at the time, and I looked at it and I went, there is no way I can stand losing that much money on a race, let alone the 50 to 100 races I was betting on a Saturday afternoon. I looked at that and I went, there is no way I can handle that variance. And for anyone who doesn't know, variance essentially just means, like how far you stray from your average profitability. You might have a ton of losses and then a ton of wins and you'll have a huge variance, or you might just go, win, loss, and you'll have a really smooth variance. But I realized I could not handle that variance. And so what I started doing, because I wanted to build towards that mathematically optimal way, was I would bet less and less against the horse as time went on, until eventually got to the point I was betting very little. But it was a real psychological hurdle for me, right? I never got to the point that I was not betting against the horse, because getting rid of that last little bit that I was betting, even though it was a minor difference to my variability and a minor difference to my profitability, it was a big psychological hurdle that I just never managed to jump, and I didn't really care. I didn't need to jump, but I was making good money. And so that's where I got the idea for how to improve my psychology in terms of optimizing this strategy for, getting the most mathematically perfect profitability from it. So the next step of what I'd like to do, if you do want to work on getting to the point that you're working in the mathematically best way, is instead of taking 25% at each of these targets, I might take 20. And so then by the time I get down here, I've taken 60% off, and I run 40% on my managed stop loss. And then once I get comfortable at that level, I could go down to 15, and then I could go down to 10, and I could just do it that way. So I'm getting more and more on my managed stop loss and taking less and less profit. But because I'm building up to it, in the same way we say start with $100 and build up to a big account, I'm building up to having my entire account or my entire trade running on this managed stop loss. Now, I honestly don't think I'll bother, right? Because my system works very well. The amount I'd gain in expectancy is very minor. And I love locking in profits. I love seeing my take profit hit and going, yeah, sweet, that's locked in. And I love that a lot more than when I trail my stop on a really big trade and I make a lot of money. I really like the feeling of having profits locked in. So I'm not too fussed about working on this. I might give it a go here and there, but I'm pretty happy with how things are at the moment. So it's a really good example of how I've balanced my psychology with the optimal mathematics strategy, right? I get the best of both worlds here. I lock in profit as we go, so if price turns around and comes back, I've still made money, but I also leave a little bit so that, if we see a 20k drop, I'm making money off that too. It's all good. So that is the first example that I wanted to cover. I will sort my charts out, I'll figure out what I'm doing, and I'll get you started on the second example that I want to talk about. Righto, so here we are, we're looking at the daily chart on Bitcoin. And you can see I've marked off with these vertical lines, the 1st of September to the 1st of October. Now, September has 30 days. Check that one on my knuckles, so I know that's right. And what that means is you're looking at 30 candles between those two lines, right? So let's say that you had a strategy that, on average, it took 30 candles for you to find a trade, enter a trade, exit a trade, right? So every 30 candles you'd expect to take one trade. And if you always target 2 to 1, that means in that month, you could expect to take one 2 to 1 trade because you had 30 candles. If you're trading the daily, this is. You had one 2 to 1 trade. If it won, you made 2% on your account because you risked 1% of your account. On a 2 to 1 trade, you made 2% on your account over the course of that 30 days. Sweet, that's all good. Where balancing maths and psychology comes into this is if we take that same strategy down to the hourlies, you will notice that we now have 720 candles between those 2 days. So if you can take a trade every 30 candles, you can now take 24 trades over the course of that month. That's right, I'm pretty sure, because I guessed it in the last one. I got it completely wrong when I checked, but I'm fairly sure it's 24. If you can take 24 2 to 1 trades over the course of that month, you're probably not going to get them all right? But if you did, you'd be up 48% on your account. Now, that's not compounded. That's assuming it was just the same 1% every time. Even if you got a bunch of those wrong, you are going to make more than 2%, most likely. If it's a half-decent strategy, you're going to be up a lot more than 2% because you just have so many more opportunities to use your system to take that trade. So I made the mistake of realizing this and then going, okay, I'm going to scalp. I'm going to trade smaller time frames because that's going to be the fastest way to make money. And it is, right? If you can make 5 to 1 on an average trade, you're better off trading the 5 minutes and making that 5 to 1, all the time. Mathematically, you're better off than trying to trade the dailies and just making that 5 to 1 once a month. But again, it doesn't always work out that way. What I realized after a while was I was spending like 12 hours a day in front of the screens. I wasn't super profitable. The whole reason I got into trading was to free up my time, and I was spending more time in front of the screens than I'd ever really spent working. And so I realized, hang on, something's gone wrong here. And it had, right? Scalping requires a lot of time. Even though mathematically it's the most profitable way to trade, it requires a lot of time. And so what I did was I balanced my psychology and I went, okay, I don't actually want to be doing this. And so I built a strategy that works on the 4-hour time frames, requires very little time, it's profitable. And honestly, I make pretty much as much. I mean, I'll probably make more now, but it wasn't a big hit to the amount I was making at the time. In fact, a lot of the time I was losing because, I wasn't trading from a good place. I was tired, I was anxious, I was so consumed by charts. So that's a really good example of, sometimes the strategy you can apply the most won't be the most profitable because it can muck around with your psychology if it's taking away from the rest of your life. And this concept really ties in well with the next example that I had for you, which is 2 different strategies, right? So let's say that you have what I would call a great strategy, right? It's probably a perfect strategy. So a strategy that wins 100% of the time. And it gets you 5 to 1 risk to reward, which is fantastic. But to win that often, to be that good of a strategy, it has to have so many boxes ticked before you enter, right? It has a huge criteria that has to come together before that system can take a trade. And so what that means is over the course of our same month, we're still looking September to October, you can take one trade. So you get to take one 5 to 1 trade, but it's guaranteed to win. You have a 100% win rate with this system. That's a perfect system. But you can get a less perfect system, a good system that's actually mathematically more profitable because it can take more trades, right? Because it doesn't have to have so many boxes ticked. It gets a lot more entry. So even though its expected value is not as good, the amount of times you can apply it is so much higher. So what we'll do is we'll compare 2 strategies. So let's use our strategy from before, right? 2 to 1 trades. You got 24 over the course of the month. So we have our great strategy, which is 1 trade a month, 1% risk, 5 to 1 risk to reward, and 100% win rate. And we have our good strategy, which is 24 trades a month, 1% risk, 2 to 1 risk to reward, and 50% win rate. Now, if you take the great system, you get to make 1 5 to 1 trade a month. You're guaranteed to win. So what you end up at the end of the month is up 5%, right? You get your one win, take no losses, you're up 5%. That's good. There's nothing wrong with that. If you got that going for you, fantastic. But the good system, you make 24%, you lose, that should not be 24, you lose 12% because you're only losing 1% every time you lose. And so you're making 24%, losing 12% on your 12 losses. So at the end of the month, you're actually up 12% on your account. So even though this is not as good of a strategy as the great system, you actually make more money trading this system because you get so many more opportunities to trade it. So that's another great example of balancing maths and balancing your psychology. All right, and this brings me to the last example I want to cover, and it's a really good example, in my opinion, because it shows how I'm not a perfect trader, right? I really want you guys to understand that you don't have to be a perfect trader to win. I am certainly not a perfect trader. I like to consider myself a good trader, but I am far from perfect, and I used to beat myself up for not being a perfect trader. There are probably some perfect traders, I'm sure there's not many, and you definitely don't have to be a perfect trader to be profitable. So this is a really good example of a current area that my psychology and risk management isn't balanced as well as it could be. So I was short from these supply zones, right? This is going way back to the start of October, which is actually not that far back, but we're back there. I was short from these supply zones, and I know for a fact that the majority of my trades that play out, when we hit the entry, they reject really strongly. They bounce. The majority of my trades that lose are the ones where we start consolidating up into the zones. And so that's why you'll hear me say it's the drift that kills you. Consolidation under resistance tends to be bullish. Consolidation under above support tends to be bearish. You'll hear me say those things. They all sort of allude to the same fact that when we're consolidating at my entries, it's usually a bad sign for my trade. Now, one of my mentors, the great Donnie Collar, I don't know if he took this trade. I'm going to speak for him here. I'm not going to speak for him. I'm basically assuming what he did or what he would have done if he was in this situation, because I don't know if he was short from here, but just based on what I've seen of the way he trades and speaking to him, when he starts to get closes like this, a lot of the time he'll close out. He goes, all right, it's not doing exactly what I expected it to do. I don't want to be in this position anymore, and he'll close. And what that means is he's very rarely taking a full 1% loss, right? Imagine if his average entry's here and he'd closed on this candle, he sees the bull hammer, he sees all these closes, he goes, nah, this doesn't feel bearish to me anymore, I'm closing. He probably would have actually closed for a very slight profit, 0.3. So by the time he pays fees, he's broken even. Breaking even is great in this game. If you're not losing, you're doing well. Me, I am addicted to being right. It was one of my greatest struggles when I began trading. It's something that I still have issues with. I do. I love to be right. I hate to be wrong. And so I look at this, and even though I know it's less likely to play out because I'm seeing this, I still want to be right. I still want to be right that I'm in a good short. And so I tend to not close out these trades. Doesn't matter that I know they very rarely go well for me, and I've probably lost heaps more after seeing this than I have what I've made after seeing this. I still don't close these trades. What I do is I bring my stop very close to the wick, so I'm at least losing less, right? Let's say I had the same average entry. If I was, I don't know what happened there, sorry guys. Let's say I had a 1.7 stop, now I've put it down to a 0.85, so I've halved it, right? If I was willing to risk 1%, now I've only got 0.5% risk, so that's better, but it's definitely still far from optimal. And you'll see, if that trade kept playing out as it did, I got smashed. I didn't get smashed, because I only lost 0.5%, but I got wicked out. Whereas if I'd closed down here, I could have made some money, and I would have been a lot closer to break even if I hadn't made money. So that's one area that I still haven't managed to balance my psychology and my risk management that well. I've definitely improved because at least I moved my stop down, but I still have the issue of wanting to be right, and it's something that it's a work in progress. So that brings me to the end of the video. So those are a few of the ways that I have found psychology and maths need to be balanced in your trading. Now, I'm sure there's many more. If you guys have something you know of, hit me up. If you have suggestions for dealing with any of these, definitely drop them in the comments, because I'm sure they'll, hopefully they'll help me, but I'm sure they'll be able to help other people as well. But yeah, basically what I'm trying to say here is we're not robots, right? Just because something is mathematically the best way to do it, and you might learn that from your data, it doesn't mean psychologically you'll be able to deal with trading that way. And that's important to realize. And should you strive for getting the maximum profits? Yes, to a degree is my thoughts on that. You know, if it's going to take you years of work to etch out another like 0.01% profit, probably not worth it. You're going to pour hours into it when you could be off doing stuff you actually want to be doing for, you know, another $1.50 at the end of a trade. Probably not worth it. If it's a big gain for very little work on your psychology, go for it, 100%. That's I suppose another thing you're going to have to balance is how much of your psychology is worth working on and how much is worth leaving when it costs you a very small amount of profit. Obviously, if it's leading to big losses, cut it out, work on it. If it's just, I made 11% on this trade instead of 11.5%, probably not that big of a deal depending on what it is. If it's an easy fix, fix it. If it's a very hard fix, maybe work on progressing it or just go, I'm cool with dealing with that. There are certainly areas, like I've shown, I'm very happy taking partial profits. I'm much happier taking partial profits than I am writing my stop loss. And it's not something I'm that fussed about working on. I may never bother working on it further than I already have. So that brings me to the end of the video. I know it's been a long one. Like I said, it's something I was very excited to cover. I really hope that this has opened your eyes to some things. Hopefully it can help some people if they are dealing with any of these issues and want to work on balancing these things. Hopefully you got some cool suggestions from it. As always, please do like and subscribe. It really helps me. Drop any suggestions for videos in the comments. Drop any comments on this video. You know, if it sucks, it was too long, let me know. If you learned something cool, please do let me know. I'd love to hear that. And yeah, happy trading, and I'll talk to you guys very soon.